The $1,000,000 question: how do entrepreneurs transition from self-employed to owning a business that turns a profit? My name is Chris Waters, and this podcast has the $1,000,000 answer. Welcome to CEO Secrets. Hey guys, it's your host, Chris Waters of CEO Secrets. I'm excited to have Jeff Harris with us. Jeff has had some really incredible growth. He's landed on the Inc. 500 list, one of the fastest growing privately held companies in America. Jeff, welcome to the show.
Thank you. Appreciate it. And look forward to hanging out with you.
You know, I want you to share with everybody a little bit about your business. And as we were talking before the show started, I hope something we can dive into is the SPAC world, SPAC, and you can kind of educate us on what that process looks like and advantages and some of the things you've learned. Why don't you kick us off? Tell the audience a little bit about the industry you're in and what you're doing.
Sure. So we created springbig not for the industry we're in today. We actually created it to service the small business industry. So like the yogurt shops of the world, the pizza shops of the world. And what springbig's platform does is it works with retailers. And now we actually have a separate platform for brands, but I'll focus on the retailer platform first, where we give our clients the ability to create and manage their customer loyalty program, as well as by leveraging all the data that we collect, that we need to collect because we need to be able to calculate loyalty points and manage the loyalty program. We have the ability to serve up a lot of different segment opportunities for our clients to be able to communicate via text, email, or push notification with their customers. So at a high level, we're a loyalty and digital communication technology platform. Currently, we're servicing the cannabis industry. We pivoted to the cannabis industry in 2017. So right now, our sole focus is cannabis and the retailers and the brands and wholesalers that are servicing the cannabis industry.
And you have over 1,400 retailers you're currently servicing through your platform, springbig.
Yes, we have 2,300 locations. We have over 1,000 clients, but over 2,300 locations that we're servicing. And we have about a newer business, but about 70 wholesalers and brands. So we've been fortunate to be able to get some nice adoption within the industry.
Was this a category you kind of found and were like, hey, there's no competition, it's a growing market? Is that how you kind of jumped into it?
Yeah. So when we were thinking about it, when we originally launched it for small business, we thought there's millions of small businesses, so this is going to be a great category to go after. But then we realized over time that it's not as easy as one would think to get in touch with the decision maker of the yogurt shop or the pizza shop or the nail salon. It was hard because we realized that the owner, who's usually the decision maker, is not in the store very much. Mm-hmm. So how are you going to get a hold of them? So we were growing, but we weren't growing at the pace that we wanted. So we were debating what to do, and we had 2 cannabis retailers that were on our platform in 2016. We looked into it more and we said, oh my God, this is an industry that's literally just in its infancy and it's going to be growing tremendously fast. So, we did some more research and we made a decision to pivot to that industry. So 100%, we looked at the industry, we said, wow, there's this new industry. There's not as much competition. Let's get into it early. Mm-hmm. And it worked out to be a really good decision.
Man, that's huge. That's awesome, man. Congratulations.
Thank you.
And 21 million users? Is that what I read?
41 million.
41 million users.
Yeah. So basically what that really means, let's kind of break that down for everybody, for your listeners. What that really means is that we have 41 million consumers that are participating in the loyalty programs of those 1,000 or so customers that we have, right? So, wow. So that's how that plays out. So we're helping our clients acquire those loyalty members, but at the end of the day, our technology is supporting the loyalty program for the retailer, but the retailer is really the one driving the enrollment and their customers to participate in the loyalty program. But it's very interesting because we actually then have a lot of data that we can look at and see how these customers behave, whether based on demographic differences, based on geography differences. So it does give us a really good view into what's happening in the industry, for sure.
Have you found any like blanket incentive to the consumer that will drive them back to the retail shop?
Yeah. So what
preach to everybody?
Yeah. So I think, again, this is for the cannabis retailer, right? So the cannabis consumer, let me say it another way. There's a misnomer out there that you're going to open up a cannabis retail shop and business is just going to flood in, right? Like everyone thinks, oh, it's a cannabis store. You're just going to get customers walking in the door and you don't have to promote, you don't have to market, you don't have to do all the things that a smart retailer has to do. That's really a misnomer. The cannabis retail environment in most parts of the country is very competitive. And you have to do all the right things as a retailer to drive customers. So you have to make sure the store is in great shape. You got to make sure your personnel is in great shape. You got to make sure that your loyalty program is competitive. You have to make sure that your promotional program and marketing program are competitive. So all the things that a retailer would have to do outside of cannabis, even more so, because it's shocking how competitive it is. But also the cannabis consumer is a very promotionally focused consumer. So you are seeing a lot of cannabis retailers that are constantly working on their promotional strategy and making different promotional offers for different days of the week or different days of the month, because it's a very promotionally focused consumer. So one thing we learned, which I was surprised actually, is how promotionally focused the consumer is.
What were you doing before this, just out of curiosity?
Yes, I started a loyalty marketing agency. So a little bit of a different model, not a technology model, but more a technology-enabled agency servicing retailers, financial services companies, insurance companies outside of cannabis. So I started that business in 1998. Wow, that goes back a while. And I still own the business, a majority of the business, but I'm not active. I left the active management of that business in 2013. And that gave me the impetus to start SpringBig because I was like, okay, what am I going to do next? So luckily, we have a management team who's running that business who I think is doing a better job than I'd be doing, which is great. And I get to focus on this new opportunity.
So, gosh, I mean, so you've been in this game for over 2 decades.
Yeah.
Is there an industry-agnostic plan you can implement to increase repeat and referrals?
Yeah, so I think the answer is yes, there is. And what you need to be thinking about is what type of retailer are we talking about, right? Are we talking about a retailer where the customer can theoretically visit once or multiple times a week? Are you thinking about a retailer where they can come in a few times a year? Are you thinking about a retailer where they can come in once every 3 years, right? So it really depends on what the retailer is selling. But presuming the retailer is selling a product or a service where the customer can come in on a regular basis, constructing a loyalty program that's going to drive that customer to choose that store versus their competitor's store is really at the heart of what loyalty is all about. It's really getting the customer to either cross the street, drive a little bit longer, pick A versus B, so whether it be food or coffee or groceries or like things where customers are coming in on a regular basis, that's where loyalty really, really works. It works as well for retailers where it could be a sporting goods store and you're going in a few times a year. And again, you're going to choose one versus the other because you have loyalty credit. But the answer is a loyalty program properly constructed will work for most retailers, not all, but it'll work for most.
So what about outside of the retail industry? Like, let's say, I run a real estate brokerage. The number of times a consumer transacts is extremely infrequent, 3 to 5 years, best case. Is it a lost cause to be trying to implement a loyalty program?
I think so. Honestly, I do. Because you're not going to get the engagement from the consumer, from your buyer in between, that 3 to 5 year period. Now, that doesn't mean that there aren't other strategies that you want to put in place to stay in touch with that buyer, right? So when it is time for them, where they're thinking about their next home, their new home, they're moving, that they're going to think about you first. But I don't think it's a loyalty program from the perspective of a rewards concept. It could be more of an awareness program. It could be more about, staying in touch with them at the right time. But I don't think it's a rewards program in that business for sure.
Got it. So let's talk a little bit about the SPAC. Just before we get too far down the rabbit hole on this, can you share what kind of revenue you're producing with your current company?
Yeah, so we're projected to do about 24 million in revenue this year.
Okay.
And it's up from 15 million last year. So, so the growth has been nice. I mean, it's funny, when we were smaller, we were growing at higher percentages, as it makes sense, but we're continuing to grow at a nice pace. So we made a decision to merge with a SPAC because in the cannabis industry in particular, we see that there's an opportunity to be a consolidator of various marketing and advertising technologies that are servicing the cannabis industry. And we felt it was going to be a more efficient way to be a consolidator and to be a buyer of those technologies if we not only had the NASDAQ currency, but we had the cash that came along with being a public company to be able to make those things happen a bit more efficiently. So, there's a number of different ways to go. You can continue to raise growth equity through private investment, which is definitely a path that I'm sure, a lot of companies use, a lot of your listeners use. We chose the SPAC route because when we felt if we want to be a consolidator, we wanted to get more efficient. And we thought that approach was going to make it a little bit more efficient for us.
So for someone that has never heard of the term SPAC before.
What does it stand for? Yeah. Special Purpose Acquisition Company.
Okay. And you said you're being acquired by somebody else?
So the way it really works is you have this public entity that doesn't have an operating company. They have shareholders, they have cash.
Give me an example.
Their list. So there's thousands of these companies. And I would, this is kind of like the old term. It was like, if you ever heard of the term a shell company, right? Okay. So it's like the new version of what the shell company was. A shell company was, they're a public company, but they don't have a business, right? They just have shareholders and money that is sitting there that is basically looking for a company to buy, to absorb into their organization so that they then have a public operating company. So SPACs, a little bit different. They're created for the purpose of buying a company like ours, merging it into the SPAC, and then the company that they buy becomes the operating public company. So they raise their money. They raise the money to make these acquisitions with that specifically intended. That's what they're intending to do.
So what's the benefit to you, the entrepreneur and founder? Like, what happens to your equity when you get acquired for the SPAC?
Yeah, so obviously there's some dilution, right? Because you're merging the value of our business with the value of the cash that's sitting in the SPAC, right? So there's some dilution, but the benefit to us is it's a faster way to get onto the public market. The SPAC has done the work, right? They're already listed on NASDAQ. They already have the money. They've done all that work. So you don't have to go through the whole IPO process. You could get bought by a SPAC and then you become the public company. So it's faster. The other benefit of a SPAC is you do have the ability to outline future projections. So you could tell investors where you expect to be in 23 and 24, where you don't have that ability to do when you're an IPO. You don't have that opportunity. Legally, you can't do that. So the benefit for us is that it's a faster path to get to the ultimate, the end game, which is what we want to do. We wanted to be a public vehicle that we could then leverage the currency, both the stock currency and the cash, to be able to grow non-organically.
So is this a better deal for the entrepreneur that starts the business? Like, are you more likely to keep more of your equity by going through a SPAC?
Well, keeping more, like, you're obviously diluting your equity with the percentage of the ownership that the SPAC shareholders come to the deal with, right? So there's definitely dilution.
Is the dilution greater or less than if you were to go, for example, raise money through a venture private equity group?
It could be greater or less, right? It really depends on what value you're going to get from the growth equity funds and how much money you're going to take in. But presuming you're going to take in a similar amount of money, the dilution is not going to be different. It's going to be very similar to it. There's a little bit of a piece where the sponsors of the SPAC, meaning the people that put the SPAC together, part of the SPAC deal is they get a percentage of the company for being the promoters or the founders of the SPAC. So you're giving up a little bit of extra dilution there because of that piece. But on the benefit side, as you're becoming a public entity faster, and presuming you're going to continue to do well, like, you should get the multiple benefit of a public company over time versus a private company multiple. And usually the public company multiple is greater than the private company multiple. Mm-hmm. So I think it compensates for that over time.
What revenue number would you recommend somebody be aiming for before doing a SPAC deal?
So we're on the small side of it, actually. So that was one of the questions we were asking ourselves, like, are we too small? But when we looked at our growth rate and we looked at where we thought we were going to be 3 years from now, what I found amazing when we were going through this process is that we're being valued on what we expect 2023 revenue to be. So when we looked at it that way, we said, okay, based on our growth and based on our plan, we're not going to be too small, but we were definitely on the smaller side. What everyone is telling me, all the people that are smarter than me about this part of the business, is you want to get to 100 million in revenue as fast as you can. That's like a real tipping point for us. So we're going to try to work really hard over the next 3 years, both organically and through acquisition, to get to that $100 million revenue number. They say the game changes for companies like us when you get there.
How much money are you going to have access to in order to facilitate various acquisitions to drive revenue?
Presuming no redemptions, which is not, fair, because one of the other things about a SPAC are the shareholders have the right to take their money back if they don't like the deal, and that vote will happen in a couple months. But we're presuming like an average of about 20 or 30% redemptions. There's always going to be some percentage that want to get their money back. We'll have about $150 million of cash, as well as the public currency, the public market stock, to be able to use for acquisition.
And then how much money do you get? Do you get a payday from the liquidity event, or do you have to wait?
No, we didn't know. We're rolling our equity over. So we don't get a payday when we close the deal. Obviously, over time, when our lockups expire, we have the ability, based on an organized way, to trade the stock if we want to trade the stock. But we don't get a payday upon the close. We get a payday down the line, either when our lockup is up or when we choose to sell the company.
How long is the lockup?
Mine's a little bit different just because I'm the founder and a major shareholder, but usually it's 6 months.
Got it. And do you mind if I ask how much equity you had to give up in order to get access to 150 million?
So it's all public. So we're being valued at $300 million. And it's like a $500 million overall enterprise value. So we basically, the Springbig group is giving up about 45% of its equity. And we're exchanging that but we were valued at much lower just about a year ago. So still, there's a big step up in value for us. So even with the equity that we're giving up, with the cash we're getting, we believe we're going to use that money to even grow our value even more. Mm-hmm. And it still was a big step up over what we had about a year and a half, a little bit more than a year ago.
Is there any risk where, your equity could go down significantly in value?
Sure. Absolutely.
What does that or use case look like?
Well, if let's assume we finalize this transaction, we're now a public company and our stock goes down. So if our stock goes down, our equity value goes down. So it could definitely happen. Our stock can go up, our stock can go down, although we're in control of a lot of our destiny, we're obviously not in control of all of our destiny. There are macroeconomic factors that can affect your stock price. There are industry factors that can affect your stock price, both positively and negatively, by the way. So for example, if all of a sudden our government decides that they're going to legalize cannabis federally, it's going to be a big positive for our industry. If there's a recession, it's a negative for the stock. So we don't necessarily have all the control that we had. But then on the other hand, we believe that we have laid out a course that is going to be helpful to our shareholders to help us and them grow our value together, by leveraging the assets we're going to be able to acquire through this transaction.
From what you've learned, what would you say is the minimum revenue mark you need to be at before you consider this?
Where we're at is probably the minimum, 24, 25 for sure.
Okay.
Yeah. And I think we're probably even a little small.
Okay.
So people we were always talking about maybe going to 50, but the dynamics of our industry changed where there's just a lot of consolidation activity. So we wanted to move a little faster. And, in negotiation with the SPAC, we found a partner that saw the same vision that we saw. So we're excited to work with them to move it forward.
Where do you go to just find like a directory of these people to partner with on the SPAC?
So there are definitely listings out there where you could go and kind of just Google, when SPACs are created, they're usually created with some intent. So for example, we were looking at SPACs that were created with the intent of investing in cannabis technology companies. So the way we did it is we actually, our investment banking firm are the guys that led that charge. We hired an investment banking firm a little less than a year ago. So they helped us with that. And so I didn't spend a lot of time focusing on researching it myself because I knew we had the investment banking guys who were going to help us with that.
What investment banking shop did you work with?
We're working with Jeffries.
And do you feel like you had a good experience with them?
Excellent. They're top notch. Cool.
Let me look this up here. Your exact Inc. 500 reported, 1,235% revenue growth over 2 years. Is that accurate?
Okay. I believe you.
What were some of the, key hinges and just greatest ahas you had to help you hit that kind of revenue growth?
I think we were fortunate. I was fortunate that we're in a business that I understand very well. So I understood the levers that we needed to have in place and to push in order to drive revenue, both from a sales perspective and a customer success perspective.
What are those?
Just making sure we're investing properly in our sales organization. We're leveraging partners. Like one of the big ahas was how much focus we put on leveraging our partnerships, our technology partners to drive leads, which has been a great source of leads. We work very hard at training our salespeople so they're very comfortable when they're demoing and continuing to invest in them to make sure that they're comfortable. For example, we don't hire a salesperson and put them out there to do demos. They probably have to wait 2 months, 3 months, where we're training them. They're shadowing other business development people. They're really learning. They're practicing. We want to make sure when they get in front of a potential customer that they're super comfortable in being able to articulate, the benefits of the platform. The other big aha that we had, which we talk about all the time, is our salespeople are not, I don't want them selling. I want them reporting the news, right? What I mean by that is I want them to lay out the benefits of the platform, explain why it's good, but not necessarily be overly dramatic in selling it, and let the customer tell us what's important to them, and then we dive in with that customer. So that was one of the big differences. We've done an excellent job at making sure we onboard customers correctly. We invest a lot of time and energy in the onboarding process. And then we invested a lot of time, energy, and money in our client success process, where we have the right ratio of clients to client success people. We have the right infrastructure in place to really do a great job at servicing customers. One of the things we find with SaaS companies in particular is, the service side, that last S of SaaS sometimes is forgotten. And we wanted to make sure that we put extra emphasis on that, especially in our industry, because there are a lot of young technology companies in our industry. So providing great service was a real differentiator that we feel is helping us as well. So just staying focused on the blocking and tackling. Like, I think, you probably make 2 or 3 big decisions a year as a company, and where you win or lose is in the blocking and tackling. And making sure that the pieces are really in place and they're working well. And if they're not working well, what's not working and what do we have to do to course correct them? I think most of execution on the blocking and tackling is so important. And, when you have a big idea, you kind of sit there and say, do you really need to focus on the blocking and tackling? Boy, do you have to focus on the blocking and tackling. It's customers don't really care about your big idea. They care about making sure that the technology works and that the service is top notch.
What does that recipe look like, the recipe book, if you will, to get technology partners to essentially be an ambassador for your software?
So what we did is the 2 key groups are the point of sale partners that we work with and the e-commerce partners. And the number one benefit or recipe is for them to see and to hear from customers how much value they get from our platform. So therefore, they're always going to feel good about making those recommendations and making those referrals because they know their customers are going to be treated well, and they know their customers are going to get value from the platform. So that was the most important thing. 2 is making sure that the technology integration between us and them is super tight, and which again makes them look good to their customers because they say, hey, when you work with Springbig, you're going to get an excellent experience from a technology perspective and a service perspective. And 3rd, we compensate them. Like, we think it's only fair, right? Like, if they're investing in the integration, we want to make sure that they're getting compensated for the work that they have to do on the integration. So we also make sure that there's a fair rev share in place.
Do you have salespeople that specialize in working with those vendors, like face to face? And
we do. We have a partnership team. All they do is work with partners. So we're working with them on two levels. We're working with them on the decision maker level, but we're also working with them on the client success sales level, because those are the ones that really have the referrals. So we're working with them on two different levels.
Interesting. Yeah, that's great. So if there's I'm curious if this is even a possibility. If there's anybody listening to the show and they're like, well, man, I would love to invest alongside, the other investors, put in the money for the deal you're about to go into.
Yeah. So the stock's already public. It's already being traded on the NASDAQ. I'm not recommending that anyone do it, but if they do the investigation and they make their own decision, the name of the SPAC is Tuatara Capital Acquisition Corp. So that's the name of the SPAC. They could find it, and it's on any, it's a NASDAQ traded stock. So they could definitely look at it. I highly recommend that they do the research for themselves. Like I know how to operate a loyalty technology company. I am not an expert on the market. So I'm not one to give suggestions or recommendations on if it makes sense, but that's, if they were interested, that's where they would go.
That's great. Well, hey, I really appreciate your time today, Jeff. It's been incredibly insightful. I appreciate the education on SPACs. And what's the best place for somebody to go if they want to learn more about you and check out your company?
Oh, just feel free to have me email me myself. It's Jeffrey@springbig.com. I'd love to hear from people. And I try to get through all my emails every day or so. So I'd love to chat with some of your listeners. It'd be great.
Great. I'll put Jeff's info in the show notes. Jeff, thanks again for being on the show. Guys, don't forget to hit that subscribe button if you're listening to us on iTunes or YouTube. And we'll see you next time. Bye, everybody.